Hello.
Hey, what's up, Reagan?
Hey, morning, donuts, kolaches, kids, cartoons, the usual Saturday morning here.
Oh, that sounds awesome. I I have something I want to talk to you about, but I just started the stream, but I can talk to you about it after though.
No, okay. Okay. Yeah, I should be around until kind of like 11ish. Then I gotta take kids to a birthday party.
I got you. Yeah, it's not anything like important, so to speak. It's just talking about some potential code.
Okay.
But yeah, we'll catch up on it later then for sure.
Cool.
Let's see. Give people a moment to hop on. This is kind of one of the ones that be really beneficial to look at the stream. It's going to be very chart based. Veritas, Samuel, you guys on the stream? Or do I need to give you a little bit longer? Oh, it's all good. I haven't started yet, but am about to. I'm just gonna wait about another minute or two, see if anybody else joins. We got Matthew hopping on. Okay, yeah, I was tripping for a second. It's like, why would that be happening? Yeah, it's the only thing that sucks is the lag. So like Discord is like real-time audio, whereas even though I have the latency set really as low as it can be on the stream, it still has that lag. Alright, we're gonna go ahead and get started. So here on the stream, I just have a 1 minute chart pulled up. Now I don't have any systems that run on the 1 minute chart simply because there's just generally too much noise, too many false signals. So it's typically not a very good chart to make systems on, or any system you might make on it just does better on higher time frames. What it is good for though is getting potential ideas for patterns. Since these are the same patterns that can occur on higher time frames, it just kind of gives us a good a good scope to potentially find some things to work with. And so what we can start off with is I just have a couple of indicators up on the chart. We have an EMA, we got the VWAP, we got opening range, we got the DSS, which is double smooth stochastic. It's pretty much just like the RSI. And then we have the ADX, which is basically designed to tell us if we're trending or not. So I see the ADX has two lines. It has the upper line indicating that we're in a very efficient market. You can see where it went over the line here. We can see what happened previously. Okay, so obviously this isn't indicative of what's going to happen, but it does let us know that, okay, previously we were very efficient, and then of course when it's below this purple line, it's indicating that we're in a very inefficient market, so potential consolidation, noise, everything like that. One thing I like to do with the ADX is just add a moving average on it, because the ADX tends to be really really noisy by itself. So let's just add an EMA real quick. So we'll go to EMA, choose the panel as 3, set the inputs to ADX, and see how that looks. So it looks a lot smoother. You can see when we we cross or go above the these thresholds, there aren't as many fake outs. And then we can just make the ADX transparent. And now it's gone. So basically now we have like a nice little smoothed ADX. So we can look at the open each day to kind of give us ideas, because there's only so many things that can occur at the open. Well, of course there's quite a few things, but once we kind of narrow down the premise of the potential patterns, it gets a little bit easier. So for example, this market, it opened up, you got a push up, you fell down, and it made a push here, made a higher low, and then ended up trending for the rest of the day. So there's a lot of, several different ways you could look at the way this market acted today It pretty much just looks like a textbook, like an ABC pattern type deal. And of course, we're on the 1 minute charts, so you gotta be able to kind of look past the noise a little bit. On a higher time frame, this probably would have looked a lot smoother. But so pretty much just got a ABC pattern for this day. And if we zoom in a little more, we can look at maybe some of the opportunities that would have worked out. Let me get rid of these little lines. And so, for example, you can see here on the DSM, we go overbought. And then if we would have gotten in on a pullback after it went overbought, it would have gave us a really nice trade, right? And so a potential idea would be, if we go overbought and then we get a trigger without the DSS going oversold, then we go long, and then our initial risk would be if it does go oversold. And so we can't see the 50 line. It's there, but this dark blue doesn't do a very good job at showing up. So let's change the colors. It's neutral, let's give it a white. And then the actual, let me see. Where is it at? Trying to find where he puts the color for the DSS. Really? Okay. So that's how he does it. Let's make the midline the midline magneto. Okay. So for this, we went overbought, and then look for a trigger within. Once the DSS crosses back below the 50 line, so basically quantifying the pullback as DSS going below the 50 line. So we go overbought, and then DSS goes below the 50 line. Look for the DSS to cross above the signal line, so that would be our trigger. And then our initial stop would be if the DSS goes oversold. So that's, a pattern that we could potentially test. And let's just go to a previous market day. Let's go. So this one, obviously, it gives us a whole different picture to look at. And the first opportunity I see here, which is a pretty common pattern actually, is like the market sell off and then the reversal. So you can see as soon as we opened up, the market sold off. You see that on the DSS, a little oversold. And then we crossed back above the signal line, and we could pretty much risk the same thing as the last one, is we just enter in on the cross, and then our initial stop would be if we go oversold again, and then our target could be whenever the DSS crosses below the 80 line. So yeah, you could do when it crosses above the 80 line, but as you can see here, it leaves a lot on the table, and it definitely will over a large sample size, versus whenever it keeps on going up, 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 and up, you can just exit when it crosses below the signal line. Or yeah, when it crosses below the signal line, or when it crosses back below the 80 level. So you could say, when the market opens up and within the first 5 bars, if we go oversold, look for a trigger. Exit when DSS crosses back below the 80 line. Or if we go oversold, in which case if we would have, went long here and then DSS reversed again, went back to the downside, we've gotten out. And so then there's another pattern that we could potentially test. Let's go to the previous market day. So ironically, this is pretty much the same pattern here, because like I said, it is a fairly common pattern. You get like a market sell-off right at the open, and then a swift reversal. In this case, price is above the VWAP, so it could just say, if we sell off at the open and price is above the VWAP, then look for a crossover above the EMA line, which we get here. So like within the first X amount of bars, we fall below, or we tank essentially, and then look for a trigger to cross above the EMA line, risk the previous low, so risk the previous swing low. And you see on days like these where we sell off at the open, cross back above, risk the previous low, maybe move your stop up, to break even or some type of trailing stop. Then it'll reduce your potential risk. You'll only have your you'll only have your maximum risk at the point of entry, and then the risk will instantly be reduced as long as price moves in your favor some. And then you could just hold until the market close, So basically you've quantified a pattern where any day the market sells off, then reverses, you're going to just hold it to the close. And, in situations like that, it works out great. And so you can see how it's really easy to get to get ideas just looking at the open each day. You don't really have to, overthink it. Especially for the type of patterns I go for, I want to always catch those fat tails. So I want, the pattern just have some good fat tail potential. And so here we can see it's basically, where the fat tail occurred and what type of pattern started the fat tail, essentially. And this one definitely shines, seeing the rejections above the opening range, and then how we cross below the EMA. So let's see. Yeah, absolutely. It's basically what I was saying. Look at where the massive move occurred. Look at how it started. Kind of quantify the way it began, and then see if that happens often by running some tests. So in this scenario, we went overbought on the DSS, went above the opening range, fell back in, and then crossed below the EMA. So a really simple way to quantify this one is we can say if price is greater than the opening range, but the EMA never crosses above the opening range. Basically, the EMA stays below the opening range, and then we end up crossing below it, then enter short, look for a big move downwards. It's a really easy way to quantify that one. Versus if price grows above the opening range, and then it keeps on going up, and eventually the EMA crosses above the opening range high, then we're no longer looking for that pattern. Also have another pretty interesting pattern here where we close beneath the opening range low, but then we cross back above it. We could say, if we cross above the opening range low and we look for X amount of bars ago, so if 5 bars ago we were above it, then we enter long, because that's only going to occur in scenarios like this where we cross below it and within a certain number of bars cross back above it. Basically just quantifying those fake outs of the opening range. Risk the previous low. So it's 2 patterns there that we could potentially test. And let's look at one more market day. So this day was definitely a fat tail day. I mean, just real nice move all the way down, pretty much to the close. Had a little recovery towards the end. A lot of different ways you could look at this one. It doesn't really matter where you enter in at. You could definitely say, if the 20 period or any period moving average is below the opening range, then you could say, look for it to go overbought. Above the moving average, and then let's look for it to go oversold again. Any type of pullback scenario is going to make you, make money on days like these. The leading indicator would just be if the EMA is less than the opening range, then look for a pullback that is above the EMA but not within the range. So that's only going to occur in established trends. So EMA is less than the range, price is greater than the EMA but less than the opening range low, and then look for any type of trigger. Basically, any trigger that was, that's within this region. So we're looking at the region that is in between the opening range low and the EMA. Any type of trigger in here, and then your risk could be, countless things. If I was trying to test this pattern specifically, I'd probably want to look at entering shorts, and then risk being the opening range low. So if we go back into the range, consider that invalidation of the pattern, and then there you go. Another thing that happened here is just simple, EMA crosses below VWAP within the opening range. So if the VWAP and the EMA are within the opening range, we cross below it, we hop in short, risk the VWAP. Cross above the VWAP. So yeah, I mean, it's just pattern after pattern after pattern that you can come up with and test. It probably gets easier the more you do it. But definitely, like Gold said a minute ago, looking for seeing where the fat tail occurred, and kind of identifying what happened before the fat tail happened, and obviously initially your idea is very overfit to this specific day. That's why whenever you create the pattern, you need to think of it in the most robust way possible and not be nitpicky, because nitpicky obviously isn't going to translate to anything else. It's like this pattern, the way I described it, is a very robust way of describing it. It's just EMA is less than opening range low, and then we look for a trigger in this range, and that's something that can translate to, anything else, instead of, really nitpicking about exactly what occurred in this scenario. Because once we quantify it, that's whenever we just slap it in the builder, we run some tests, and we're going to find out, is this something that happens really often or is it not? And that's the only question that we're seeking to answer is, does this happen really often? Because like I said before in previous videos, that's the only thing that dictates the success of a pattern. You don't have to overthink anything. Either it happens a lot or it don't. Like this pattern right here, EMA cross below the VWAP when the VWAP slope is downwards. In case you're curious about why this VWAP is colored, it's very simple. It's actually not slope, but it's generally always correlated. Price is below the VWAP, it's red. Price is above the VWAP, it's blue. But you could definitely use slope. If the VWAP and EMA is inside the opening range, look for a cross, so the EMA crosses below the VWAP. And then look for a massive freaking move to the downside, or obviously the opposite, look for a massive move to the upside. That's a pattern that will easily translate to anything else, so you don't need to overthink it. So anyways, we could do this all freaking day, but we'll go ahead and just code one up if you guys maybe liked one more than the other, just any that you want to test out really quick. I guess we can test out more than one. You don't have to just pick one in particular, but any pattern that sticks out to you particularly that I described, any of them that touches your soul. Let's see. Overbought, gone in on a pullback, would have given us a really nice trade. 100 pound DSM's overbought pullbacks, DSS go below 50 line without going oversold might be a great place to get in, where the MA crosses the signal line to the upside, with the stop being if it does go oversold. Cool, so that was our first pattern we came up with, and I think it it does have some potential. Let's go back to it. So as a quick refresher,
I have a question.
yeah, what's up, Matthew?
I don't see the DSS indicator.
It's a custom one. I can give it to y'all.
Okay.
But it's just, like I said, it's basically like a smooth RSI.
Yeah.
So it's pretty much going to get the exact same results in RSI.
With the RSI. Okay, so you just play around with some of the, I see the numbers 2014 735. Okay. So you can play around with.
Well, I mean, this one, like those settings wouldn't replicate on the RSI, but so the DSS is just like a smoothed oscillator. So we're in the category of range bound 0 to 100 oscillators that all do the same thing when it comes to just identifying oversold or overbought signals. So it's really your preference. Like I think I have like 20 of them.
Okay.
So, but for the RSI to replicate this DSS, it would need to be like a longer length RSI to make it a little bit smoother. So the default RSI is 14, probably make it like 28 or something.
Yeah.
But I will share the DSS with y'all.
I just posted it in the indicators.
Okay, cool.
Thank you.
Yeah, I really like the DSS and DSM by the William Blau. Let me go back. Okay. So the pattern here is we go overbought, and then we cross below the 50 line. So it's essentially a multi-step trigger. First we wait for it to go overbought, and then we wait for the DSM to go below the 50 line. And then we look for the 50 line to cross above the signal line if it hasn't gone oversold, which it looks like once we changed the color, it actually did go oversold here, just barely. But nonetheless, I mean, if I changed the period to 15, it wouldn't have happened. So we can still test the pattern out. So we cross back above the the signal line, and then look for a massive move. So let's get that going real quick. So new strategy, we'll call this DSS pullback. I already know I'm going to need a variable, so let's set the variable to pre-long. It's going to be false. And so let's go to the DSS. DSS, we're going to plot it on the chart. Make sure the value applies to DSS. Cross above the 80 line. So DSS crosses above the 80. That's going to set our pre-long to true. And so right off the bat, the thing that's going to invalidate this pattern is if the DSS crosses below the 20 line. So we can go ahead and set that up to set our value back to false. So DSS cross below the 20 line. It's going to set our pre-long back to false. So on the other sets, we need to say that if the DSS, or my bad, the pre-long variable equals true, then if the DSS crosses above the signal line, which is the average line, so DSS crosses above signal line while we're true. Unfortunately, it doesn't stop there. We need to probably copy and paste. We need to say that the DSS is less than the 50 line. However, it needs to be 1 bar ago because the cross might initiate a cross above the 50 line. So we're looking at the values before the cross happens. So DSS is less than a 50 line 1 bar ago. And then we need to copy and paste that. And do the same thing with the signal line. So signal line is also less than the 50 1 bar ago. So we're true, we cross above, and both of our values were less than a 50 line 1 bar ago. Then we enter long. Cool. So our exit can be very nonchalant to start off with, but we do need to set our stop loss. So we're just going to say, this is kind of overkill, checking it for long, but just a habit. So current market position, basically kind of checking these little boxes, checking when we're long or short or whatever. It makes things a lot easier. When you're adding a lot more stuff in the future. But so current market position equals long. And then see if I can copy and paste. Let's copy and paste. So cross DSS cross below the 20 line. We're going to exit long. So that's our initial stop. So Gold asked, do you always set a stop from the get-go just real loose? For our target, yes. For our our stop loss for a loss, no. So our initial stop loss is extremely important because we're testing a pattern, so our stop loss needs to be the level that will invalidate that pattern. And that is absolutely key to testing a pattern. You know, it's not about what do you think could be the small stop loss. It's what stop loss eliminates this pattern from happening. Which we've already dictated is if the once we're long, it goes back to oversold. And so our exit for a profit, just for like initial testing, can just be if the DSS crosses below the 80 line. Then we will exit our long position. So that means, like in this scenario here, let's see where it entered at. Somewhere over here. Would have gotten out right here. It isn't the best scenario, but it's gonna basically tell us, you know, if we're moving up, if it's moving up in our favor, and then it crosses back below. Could actually use a different one that would allow for some more fat tail action. Well, there's a funny idea. Yeah, so we actually don't even need to add that. We'll just take that off and keep our initial one. So basically, we're going to exit if we cross below the 20 line, whether we're in the money or for a loss, period. So it's either or, we're just going to get out when it crosses below the 20 line. And then, yeah, more, you know, sophisticated trailing stop can be used. So let's go ahead and compile this and see if we are capturing this pattern. There is one issue, and it's that this pattern we looked at happens inside the opening range. So I didn't specify that. Well, we'll see how this initial pattern test, period, and then we'll see if, because the opening range in this case would be the filter. We're saying, okay, this pattern has a better chance of working out if it happens when we're inside the opening range. That may be the case. It may not be the case. But I'm not about to add a filter right off the bat. There's just no point. So let's make sure this is operating correctly. So let us go to the DSS pullback. And let's do our little baskets. I guess we'll do the 1 minute, even though I know it's probably gonna do trash in the 1 minute. And we're just seeing if, we're just making sure it's coded correctly starting out. So there's no point having a lot of data. Just gonna look at the chart, see if it's working. So there we go. Let's check out the chart. Okay, so here is a trade. So you see here, we just barely went overbought, but that set the variable to true. And you see we came down. We did not go oversold. We crossed back above. We entered long, and we exited whenever, well, we never got our exit condition, so we exited at close. So it is operating correctly there. Let's check out here. So here's a losing trade. Yeah, so we know right off the bat, you know, that our you know, it has a fat tail potential and it has the ability to catch big trends. But like I said, we're on the 1 minute chart, so there's just so much freaking noise. It's very unlikely to be profitable.
Hey, this particular trade that you're looking at right now, the red one,
Yeah.
that should not have happened, right? Because the DSS never went below the over sold and never crossed back in that instance.
I think you might have our conditions mixed up a little bit. So the condition is if we go overbought, which does happen right here,
Right?
we then look for the DSS to go below the 50 line.
Up below the 50.
Yeah, but then not go oversold. That's the thing we want. Yeah, we want to not go oversold and then give us a signal, which it did right here.
I see, that's the signal. So it crosses over after hitting the oversold.
After hitting
It crosses
after hitting the overbought.
after hitting the overbought, then it crosses back
Yes.
over.
Yeah. So we go overbought, we cross below the 50 line, and then we look
Okay.
for a trigger beneath the 50 line as long as it didn't go oversold.
Right. Okay. I thought it was going from basically oversold to overbought.
Yeah, I see what you're saying.
Okay.
Let's see. Veritas trying to jump the gun, go right to the opening range. We definitely will see if the opening range improves it. Just make sure it looks like it's operating exactly as it should. So here's another signal. We went overbought right here. And so this is exactly why I included that last condition. It's very important. Let me zoom in here. You see here on the signal candle, it caused the DSS to cross above the 50 line, which would have actually not signaled our trade. But that's why I said in the last condition that when this occurs, we look at the previous bar and see if the DSS signal line was beneath the 50 line. Because that's what matters. We want the signal to occur with those values beneath it, because it might cross above when the actual cross happens. But so yeah, here we get the signal again. So I'm not seeing any issues with the signal. It looks to be operating as we want it to. You see here, since we waited a long time, or basically since it waits for it to go oversold, it's not going to stop you out a bunch in choppy scenarios, because in choppy scenarios on an oscillator means that it doesn't go oversold or overbought. Obviously, it did have some momentous moves upwards, but not so much to the downside. And here is probably one of the more harsh losses. We see we got a beautiful momentum move up. We got in on a nice juicy dip, but then it topped out and fell off. So anyways, let me just first look at this Just look at the time of day analysis. Just see how it's performing. Something I always look at, on intraday charts, see if it just performs really well at certain times. So what's interesting is we created this strategy within the opening range. If it, we can definitely still add the opening range, but I would want to see it do better during the opening times. But once again, there's just so much noise during those time periods. Let's test out some other time frames really quickly. I'm sure we'll get probably better results as we move upwards. Now we're profitable on the 3 minute, like a 3-to-1 ratio. Let's see how good we can get it as we move upwards. Looks like 3-minute might be where it's at. So like this is this initial pattern testing, we quantified the pattern correctly. And now we're just testing it. What would be really cool to see is if we're like profitable, on multiple time frames. That would be indication, that it's a good pattern. I completely forgot I'm only doing the month of December. So once we've figured out that it's working well, we can increase the time period. So let's just do like 2 years. And we're going to keep it to just exit at the close price. Even though for these higher time frames, it'll probably benefit it a lot from swinging. Let's just see if we're profitable initially on any of these time frames. So we got 12,000 on the 30 minutes. Let's go to the 20 minutes. Terrible on the 20 minute. Still got the hour of day pulled up. Looks like we're just getting worse and worse as we lower the time frame. Well, we're actually profitable on the 10 minute. Oh, look at that. 5 minute is making some money over here. What about the 4 minutes? So 5 minutes giving us our best results. I'll be damned. 4 minute is now our new winner, profitable. Is also our largest sample size yet. I just tested the 4 minute out, right? Yeah, okay. So let's test out the 3 minute. Right now we're at 98 and 18. Performance drops on the 3 minutes. It's like it might be getting too noisy. Whereas the 4 and the 5, which is normally the sweet spot for intraday trading systems, 4 and the 5 minute. For some reason, 4 minute tends to always do better. I see it a lot. But cool, this is our 4 minute results. Let's check out some charts. See how we're looking over here on the 4 minute. You can see here we got a couple of entries in a downtrend. This is extended hours trading, both of these trades. Here a nice fat tail occurred for the long side, but you can see why we didn't get an entry. We went overbought and then we just barely went oversold, which set that variable back to false before giving us that trigger. And here's just a freaking massive win right here. That's pretty fantastic. And, just confirms that, this is just why I always make systems have that fat tail potential, because this just feels really good whenever it happens. Might not always happen, but when it does. Okay, cool. Now let's look at the hour of day analysis. You see we actually do worst at market open. So the first 30 minutes of the trading day, just no bueno. but not a big deal, because if we're doing a 30-minute opening range, we have to wait for it to be established, in which case we'd only place trades over here. Let's look at some other, see if we get some correlation. Okay, so that's what, it's kind of the first time we've seen this, but that's kind of what I like to see when I'm looking at intraday analysis. I have to see a lot of correlation on an hour or a day performance for me to even consider, you know, adding a time of day filter. And so that right there is pretty, you know, we see a lot of correlation there. See about NQ. So not as correlated, but definitely within this this time period here. So basically after the opening range is established, potentially only looking for trades after that. And we got the RTY. Even with the RTY, we get that correlation, you know. But the thing is we'll be missing out a lot on this performance the first part of the day. So what I'm going to do next is I want to add a parameter. Let me look back at the DSM. So I'm seeing which parameter I'm thinking about slightly optimizing, because it's definitely only going to be one that makes the most sense. Obviously, if I optimize a period, it would give us better results, but there's just no point in doing that. Yeah, I was thinking about probably one of the oversold or overbought metrics. And we'll just do the yeah, I think the oversold makes the most sense, because it kind of has the same impact of using a sensitivity for trend strengths, kind of like how we did on the ATR multiple, whereas some trends can be really strong then die off, whereas others can just keep on going up. Gold asks, if you do both, are you just overfitting? Is a stop and exit important? Yeah, I mean, anything you do is overfitting. As simple as that. This question is, how much are you going to overfit, and what are you going to do to validate it? Because truth be told, there is a best parameter. You know, there is a best parameter. There is a most robust parameter, but it's about your method of extraction. You don't want the most overfit parameter. You want the most robust. So it's, what are you going to do to try to get the most robust parameter? So for the oversold, initially it's 20. Let's set it to 20. And let's just real quick, let's cross above the 80. Cross below the 20. Cross below the 20. So let us take a screenshot very quickly of this. once we run this, we're going to see if we get better results than this. And then we'll look at different asset classes, see if this pattern occurs more often on different asset classes. So let us go to optimization. And so right off the bat, this is part of the process in extracting the most robust parameter. And how we're doing this starting off is, one, using a basket and aggregating the results. That's just one of the best ways to ensure you're not just getting the best parameter from each asset. And then step two is going to be, severely limiting the amounts of iterations. So instead of doing 10 to 50 increments of 1, there's no point in doing that. But we can do 10 to 50 or even 40 instead of increments of 10. So we're only giving it 4 possible iterations that all execute the same premise. And we're not just trying to, we're not just trying to overfit something. So let's start off with let's do the 50, 10 to 50, and start off with these 60 minutes. See what we can get. It shows 50 because nothing was profitable. Let's go down to the 30. It shows 20. It's interesting. 20 was our default. $15. It shows the 40 level. Let's do the 10-minute. Not too shabby on the 10-minute, but obviously not good enough. Five chose a 20, which is our default. So let's do our 4-minute now. And it chose 20, cool. So I'm gonna go ahead and take this parameter off. No point in having it. I don't really see a point in trying to optimize any of the other parameters. Might have one in the future that makes more sense to optimize. So I only want to have a parameter that I think will do a good job at making it adaptable to other products and asset classes or individual products. And so sometimes NinjaTrader does this, like if you set a parameter to something and then you try to take it off, it'll say that it's still being used. Sometimes, see, here's the error. Sometimes it does that, sometimes it doesn't. Even if I compile, it's probably still going to say that. So basically, we're just going to be stuck with, yeah, it's still giving it to me. We're just going to be stuck with this parameter for however long. So I'm going to set it back to 20 because it's not being used. It's completely useless there right now. And the next thing I want to do is test it on different classes. So let's just do similar grains. So before I move forward, actually, let's talk about a second of how we can, kind of construct our Excel sheet. Because we can do it by asset class, or there's a lot of different ways we can do it. you know, we could just say that this pattern, you know, the DSS pullback pattern, you know, is just DSS goes oversold, crosses below 50, and gives a trigger without going oversold. Hold for fat tail. Obviously going to be a little more descriptive than that, just an example. And then we can just give, you know, the index results and probably have, what was I going to say? Oh, we're going to have like just the same time period testing on. So it'll probably be, you know, just, it can be just 21 through 22, or we can actually make it longer, do like 4 years, whatever. But we're going to say, you know, for the indexes, the 4-minute chart did best, profitable on 5 out of 5 products, you know, 98. Probably just do the P&L to drawdown ratio. This is literally just off the top of my head, but it's just kind of the way that we could do it. You know, 98K minus 18K. And it can give some more metrics, and it's going to be beneficial to do it by asset class because patterns just appear differently on different assets. So that's an idea, and probably I'll work on the Excel or Google Sheets after this. But let's test out the grains real quick. So, I mean, right off the bat, really nice performance on the grains on the hour chart. Got that almost got a 10-to-1 ratio. So very nice to see that on the grains. And that's also, I mean, offers diversification right off the bat. If you run, you know, an intraday system of the same pattern on the 4-minute chart on the indexes, and then you have the same pattern but on a higher time frame of non-correlated products. I mean, that's using the same strategy but still getting some really useful diversification out of it. I mean, these are just really good numbers actually on the grains here. And look at ZC. I think that's corn. I think it's corn. Corn is going to town on the 1 hour. Down to the 30 minutes. Will we get better results? We do not. We're profitable again on the 20 minutes, but not beating the 1 hour. 15-minute is worse. 10 minutes, no good. Five minutes, no good. So now we're seeing a big difference here because those patterns did pretty damn good on the lower time frames on the indexes. However, it's a lot better on the higher time frames on the grains. But that's good for us because, like I said, diversification. So we can say, you know, the grains, 60-minute profitable on 3 out of 3 products, 11K minus 1K. And like I said, a better metric here would be the P&L to drawdown ratio, because that's going to, you know, affect the potential scalability. And we also forgetting to add coffee to the list. Coffee is definitely a grain. Let's see if we get the same kind of performance on coffee. We're negative on coffee for like testing it in other time frames. We can move to the metals, see how we're going to do on the metals. Kind of the same thing with the metals. Real nice performance on the hourly. Copper, not so much. Normally copper is the best performer, but we're doing really good on silver and platinum and gold. So we got 34K on gold, I mean on the 1 hour chart. Performance drops on the 30. Still profitable, but not as good. So it looks like we're going to get similar performance. So it looks like just the same pattern there with the grains. I'm not going to go any lower. So we got the metals, and let's see, metals on the 1 hour, got 3 out of 4, 34K minus 6K. Let's do some livestock. Not much going on the 1 hour. Better on the 30 minutes. Not so much on the 20. Getting worse as we move lower. Oh, out of nowhere a 10-minute comes through. Maybe if we drop it even lower, it'll get better. Doesn't seem so. 10 minutes, still the best performer. And I'll try the 3 minute. If the 3 minute does good, we'll move a little lower. And it doesn't. So 10-minute chart does best for livestock. So livestock. What we got? We got 2 out of 3. 10-minute, 2 out of 3. 5K minus 2K. And why not Forex? Let's try Forex. See if it'll be profitable anywhere on Forex. I'll be surprised if it is. Minutes. Come on, let's give us profitability somewhere. Holy shit, we got profitability. It's almost like a terrible ratio, but we are profitable. Let's see if we can get it any better. Right now, the 20-minute is doing the best. I don't think we're going to get any better. Moving lower here. Definitely not. So we got Forex on the 20-minute, making 4K. Where we got 3 out of 4. 4K minus 4K. And all we got left is the good old treasuries. Why do we got GE in there? I don't think GE is a treasury. Maybe it is. I get them mixed up sometimes. How are we going to do on the treasuries? Looks like we're not going to do anything. Okay, there we go. We are profitable. Looks like I don't have data for GE or ZQ, but that's fine. Profitable on the 60, not on the 30. Not on the 20. Not on the 15. And I don't think we're going to get better here as we move lower. I think the 60 was best, I think, wasn't it? 60 or the 30. No. So, the treasuries are weird. You gotta make usually systems specific to treasuries. So treasuries, like profitable, and I don't have data for those two, so 1 out of 4. $1K minus 3K. Cool. All right, so real quick, let's move back to the 4-minute chart here. And so normally that'd be like your stopping point, getting your base results for the pattern, maybe try to figure out a slightly different way to quantify the same pattern. But Veritas wants to quickly see if it does better within the opening range. So let me see here. Pre-long equals true. Cross below. Pre-long equals true. Cross above. Pretty easy way to do this. We're going to go to the opening range. Where is it at? There it is. It's actually the opposite. So we gotta do price, close, is less than opening range high, and is greater than opening range low. I'm gonna go ahead and run this on the, I'm gonna add one more thing actually. I'm gonna say that we are, time series is greater, gotta wait till the opening range is established, so greater than 9 a.m. and is less than 4 p.m. Greater than 9, less than 4. That should do the trick. But I do want to plot it, so let's plot the opening range. Okay. Let's go with that. let's go ahead and run this. This is considered a filter for this pattern. Let me see what the previous drawdown was. Some pretty nice results overall. You can see that it dramatically decreased drawdown. I actually want to look at the ratio here. Let's do, so the initial ratio was 98 divided by 7100. Nope, I'm doing it wrong. 98.1 divided by 18,800. So the first ratio was 5. And now looking at 9. So it did improve our ratio. Let's look at some other time frames, see if anything can beat it. Let's look at the chart real quick, make sure it's doing it correctly. Should only see triggers inside the opening range. Here's one of them. See that we caught a pretty nice move there. Definitely narrowed things down. Up there's another one, real nice move. Caught that whole big day. Here's a trigger that occurred here. Stayed ranging all day, so obviously no money to be made. Talk about a big ass move right there. Okay, that's a big day. So right off the bat, I'm noticing triggers that occur and price never breaks above the opening range. Often means it loses, so can definitely potentially look to see in the future if once this pattern actually occurs, then enter at the break of the opening range high. That would definitely have taken care of a lot of these losses and still capture these big winners like these. Okay, let's run it on a different time frame and see if we can get a better P&L to drawdown ratio. No good on the 5 minutes. No better on the 3. Same way with the 2. And definitely no better on the 1. We could do the 10-minute. It's gonna be a no. Definitely a no. No point in going higher. But yeah, I definitely see the value of this. You know, only doing it in the opening range. It's not too shabby. Opens up some other potential opportunities. But cool. I think this session kind of took long enough doing this one pattern. I think in a different video, might just do another one today, I'm not sure, but I think keeping the session to just one pattern that we look at, you know, adding that pattern to the Excel sheet, how it measures up, so to speak. You can see other ones would be pretty cool. So yeah, it's gonna be all for this one. I'll probably share this file for y'all. This is pretty simple, and I will keep you guys updated. So let me go ahead and end the stream. Of course, we can stay on voice and chat about it once I end the stream.